Good afternoon and welcome to the ENSILICA PLC Results Investor Presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it received during the meeting itself. However, the company can review all the questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. And I'd now like to hand you over to Ian Lancashire, CEO. Good afternoon, sir.
Good afternoon. Thank you very much for the introduction. So we're going to do our financial results for our financial year ending 31st of May 2024. So our financial year FY 2024. Just the usual disclaimers, leave you to read that at leisure. And I'll start by introducing myself. I'm Ian Lancashire, CEO and co-founder of ENSILICA. I started my career at PLC, one of the great British engineering companies, and moved into semiconductors in the mid-90s, working for Hitachi and Nokia. I set up ENSILICA as 2001 as a semiconductor consultancy company, and I've seen through the stewardship of it into one of a fabulous semiconductor company, and we'll talk about the progress of that during the call. And I'll hand over to Christoph to introduce himself.
Thank you very much. I'm Christoph Rodemann, Chief Financial Officer. I graduated from Stellenbosch University in 2002 and started my finance career with KPMG in South Africa. And after that, with KPMG in Reading in the UK, I then moved on to a small niche biopharmaceutical company where I was the UK and Ireland finance director, after which I worked as group financial controller at Oxford Biomedica PLC, a FTSE listed company I'm sure you're all aware of. Most recently, I've been with ENSILICA since May of this year. Thank you. So it's my privilege to take you through our financial highlights. We'd like to start with revenue. We're very pleased for that to have grown by 5 million to 25.3 million from 20.5 million in the prior year, a growth of 23%. And as you will see, we're seeing continuous growth in our revenues, and we expect to generate further growth in financial year 2025. EBITDA has grown by 0.1 million, so not as big a growth as the revenues. This is because we've had a large tape out for a new chip that we hope to go into production in the next few months. So that impacted our gross margins, which has meant that our growth has only been 0.1 million, although we do expect that to grow much more substantially in financial year 2025, and for our margins to go back to the expected 40% that we've seen in the past. Operating profit for the same year, for the same reason, is also up only 0.1 million. Due to the tape out, our administrative and other costs have only grown by inflationary measures. So the main difference was the impact on margin from the tape out. Profit after tax swung into a loss for financial year 24. This was primarily due to a non-cash deferred tax charge that we had to post on our intangibles capitalized, because the company gets an R&D tax credit benefit on its capitalized development costs. It needs to book a deferred tax charge for that. So that's the reason for the swing. And that has also translated into the earnings per share loss of 0.23p per share. Cash, I'm pleased to say, is 5.2 million, an increase of 3.1 million, which was positively impacted by working capital movements of 2.5 million, as well as equity raised of 6.5 million, offset by intangibles development costs capitalized of 6.4 million. At this point, it's also worth mentioning that we recently refinanced our external loans with Lloyds, which unlocked a further 2.1 million of working capital, and also much improved interest rates on the outstanding loans. We also have a potential 3 million accordion option subject to credit approval, which we would expect to be able to draw down in future. Thank you. So our business, we're a fabless silicon chip manufacturer. Our assets are our people, IP, customers, and suppliers, and we have 170 staff across UK, Brazil, and India. We have a strong IP platform consisting of cryptography, radar, analog sensing, mmWave, and beamforming. And we have a global world-class customer base, which was illustrated by being able to announce that one of our partners is Siemens, who we won a second chip from recently in the last 2 months. We also now have direct relationships with major wafer fabs and OSATs, specifically TSMC, that we're now a preferred supplier of, we're a preferred customer of. We focus on four key markets: communications, automotive, industrial, and healthcare. And then coming on to our revenues, these are split between our fees for designing chips, NRE and consultancy, and then our supply revenues. Now, getting back to the business model, our goal is to successfully win NRE contracts and then convert these into supply revenues by taping out the chip and generating those recurring supply revenues over time. NRE and consultancy revenues are similar, other than the NRE revenues have a chip at the end from which we generate supply revenues, and we're expecting to generate margins of 40% plus on those supply revenues. The chip design phase takes 2 to 3 years, so it's a longish process, but with good future benefits. And then the supply revenues, which is what we're aiming for, is anything from 7 to 10 years, but could even be longer than that. So we have a portfolio of chips in supply. We've added a few in the last 2 or 3 months, which Ian will come on to. And the more of these chips we can get into supply in future, the more of a portfolio effect we'll see, with some chips supply over supplying and other ones, and these would make up for any that might not meet their expectations, and that provides a strong natural hedge for us. We've got strong IP, and that also leads to high gross margins on the supply, as I'd mentioned before.
Thanks, Christos. So now I'll run for those 4 focus markets, and the communications market. I mean, this is primarily focused at satellite communications, and in this area, the chips go into sort of 2 main use cases. One of those is in the satellite, and that's called the payload, and the other one is the user terminal, which is the piece of equipment each subscriber has that is used to provide their broadband connectivity. I mean, everyone would have heard of Starlink and Elon Musk's Starlink, and that has really shown that lower Earth orbit LEO satellites can provide resilient internet connection. And both governments and private investment has gone into this to produce other constellations. People know about Starlink, but there are more than 10 other constellations rolling out there. I mean, last week there was one announced by the EU called IRIS-2 as a sort of $10 billion initiative to do it, but there are other ones from Amazon, OneWeb, and other governmental and private constellations rolling out there. So the great thing is, if we just talk about user terminals at the moment, if you use Starlink as an example, the Starlink terminal has 600 RF chips in it and about 20 beamformer chips. And there are 4 million subscribers, so there are billions of dollars of silicon that have gone into, that Starlink used for their user terminals. We've been very active in this market with support from the European Space Agency. We've developed 2 chips. One's a RF chip and one's a beamformer chip, and we have traction in that, winning our first design win with a $2.5 million contract for sort of satellite on the move applications with a German company, and we have traction with other user terminal providers providing chipsets, which are either selling the ones we've developed or derivative ones. So a very exciting market with huge potential of chips in these user terminals, which are called phased arrays. Or smart antennas. So on the payload side, we're active there as well. I mean, the volumes of the chips are a lot less, but you still get hundreds to thousands of satellites in a constellation. And one example there is we've had a major contract with Nasdaq listed company AST Space Mobile to deliver their chip for their next generation satellites, greatly improving the performance of those. One of the interesting things, because of the rise of this new space sector, it is very much merging with what they call terrestrial networks, which is your standard 5G and then coming to 6G, and those 2 standards are coming together with a thing called non-terrestrial networks, 5G non-terrestrial networks, and that's leading to sort of design wins on the terrestrial side. And one example of that is a $30 million ASIC win with an Italian telecommunications provider, and they're being funded by European Chip Act money to develop chips for their new products. So communication sector is a very exciting sector with huge potential of upside on volumes there, because the amount of chips that are used in these phased arrays. I mean, automotive, this is a huge sector in terms of value of semiconductor products, and there can be up to 3,000 chips in a high-end car, and the use of chips is driven by electrification, advanced safety features, infotainment, and increase in cyber security requirements. Like all of these areas, you have to pick a niche to focus on, and our niche in this area is around motor actuator controllers and sensor interfaces, including things like radar and LiDAR. I mean, as an example, the company have reached a key milestone of shipping 5 million automotive chips, and that's part of a contract worth $40 million over 6 years. So we're shipping products, generating good revenue from that. And we have another design win which we announced last week, which was also in a niche area, which is in the actuator motor controller, which is worth 31 million over sort of 7 years. And the company is actively bidding for RFQs with other automotive tier ones. I mean, it's very much a club, the automotive club. It's difficult to get in, but when you're there, then there's good revenue and good visibility of recurring revenue from automotive chips. So cover the other key focus, actually very similar to the automotive area. Lots of the customers talk German, very similar types of chips. So you'll be surprised that from a silicon point of view, the industrial sector, it's similar value to the automotive sector, and these chips are used in enhancing efficiency, precision, safety, reducing waste, and really the silicon content of industrial chips is being driven by edge AIoT, which means that the amount of silicon, and hence the selling price is higher because of the overhead of neural network accelerators in the chips. Also, new cyber security legislation is driving the redesign of many chips that could have been in production for years, but the new legislation requires new encryption algorithms and greater security, leading to their redesign. Again, our niche in this area is about sensing and control, often including ARM processors. As an example, Christos mentioned, we announced Siemens as a second design win with Siemens. I mean, they're a leader in this sector, and we had another chip, which is an industrial controller chip, which, just to give you a feel of the type of contracts, 30 million over 7 years, and we've received the first production order, and we'll be shipping those in the first part of next calendar year. The company's actively bidding for RFQs in the industrial. In the industrial sector, there's a lot of activity going on there, with a lot of redesign of chips and adding new features. Talk about healthcare. Again, this is a large sector. One of the issues with this sector, it's a longer time to revenue. So we've slightly defocused from this sector. Is one, because of the time to revenue, but also because of a lack of capital to be able to invest in the commercialization specialist sales and marketing to focus on this sector. But there are interesting products, everything from smart rings to smart devices to things like diagnostic devices, where the data's put in the cloud, monitored and then put in the cloud to provide diagnostics. So I said it's a market where we have key IP and expertise, but it over the previous period hasn't been a focus because of restrictions in capital and focusing on driving the recurring revenue up in the near term. We've had a very active 6 months, and here's a selection of the design win and customer activities that I've mentioned a number of those during the presentation. But some notable ones here is Edge AI processor, which is actually a sort of supply only. The customer does the design and we look after the supply, and that's led to we've managed to do that through strengthening our position with the key foundries. Another notable one is we've developed cryptography as one of our thing, and post-quantum cryptography, which is robust to attack from quantum computers. We've developed that, and we actually licensed that to a large semiconductor company, and that really demonstrates the value of this IP when we get high value licensing deals related to the IP. But lots of activity. I'll hand over to Christos just to walk through the numbers.
So just to take you through the income statement, I've touched on some of this already, so I'll just briefly run through. So we're very pleased, revenues going up by 5 million or 23%, and we expect further increases for financial year 25. As mentioned before, gross profit margin was distorted by a large tape-out contract. The tape-out is the phase at which the equipment for manufacturing the chip is being created, which is normally at a lower margin than the NRE work done by the company, which is why we see this negative impact. However, we expect that to change in financial year 25 and expect to go back to 40% margins, which we are targeting. EBITDA, we're pleased, was 6% above where it was in financial year 23, although we're disappointed it wasn't more, and we are targeting higher EBITDA growth in financial year 2025. Interest costs have gone up due to increased interest rates, and also the fact that the company took out an advance of 0.7 million, which was subsequently refinanced as part of the Lloyd's refinancing, unlocking 2.1 million of working capital. As I explained before, we have a negative tax or a tax cost in financial year 25 because of a deferred tax, non-tax or non-cash charge, which we were required to book. That's impacted our profit after tax. And again, just to illustrate, our EBITDA has increased by 0.1 million from the prior year, which we are very pleased with. So coming on to the revenue split, as you will see, chip supply revenues, which is a key indicator from us, has gone up by about 0.1 million, not as much as we would have liked, although we are pleased with the overall revenue number. However, we are seeing some really good traction, and we would expect the chip supply revenues to double for financial year 25. So seeing some good growth in terms of that. NRE revenues, that has increased a lot from the prior year, helped by the tape out, but also some good customer wins and activities. And then our consultancy revenues have come down due to the focus on NRE. We do expect that to go back up to the 9 million level in 2025, but it was impacted by the focus on NRE in financial year 24. Okay. So balance sheet, just to pull out some of the key areas. So intangible assets, we saw an investment of 6.4 million in the co-development of chips with our customers. As you will have seen on the previous slide, there was a large increase in NRE, and with that increase in NRE, that also would indicate a large increase in our co-development of the chip, which is something we do in order to achieve those recurring revenues over the 7 to 10 years at the 40% plus margins. Cash has increased by 2 million, mainly due to the cash generated from operations in our cash flows, and also equity fundraisings of 6.5 million in the year, and that was offset by our investment of 6.4 million in our development costs, intangible assets. Debt has gone down by 0.2 million. That's partly due to repayment of the term loans, and then also the advance taken out during the year, which was subsequently converted into the Lloyd's facility. Thank you. So our cash flow, as you can see, a very positive working capital movement with cash generated from operations. We will see some lumpiness in terms of our cash flows, but that will start smoothing out as we generate higher supply revenues, which we are already seeing happening, and should see more of in future. The tax credit received was 1.8 million, which was in line with our expectations. For financial year 25, we expect that to be around 1.3 million, mainly due to the changes the government has made to R&D incentives, which means we'll get a bit less than we did in the past, even though activities are at the same level. Investing activities, that is the investment in our intangible assets of 6.4 million, and then also capex of 0.9 million, which is IT equipment and also manufacturing equipment. And then cash flows from financing activities, that's the equity fundraising of 6.5 million, offset by some loan payments of the external loans made during the year. Thank you.
Thanks, Christos. So, we've got a strengthening position. It's been a good year. We've got 4 ASICs now in production, 10 more in the design phase. Those ASICs are going to lead to robust reoccurring revenue streams and cash generation. So we're seeing increasing number of opportunities. They're driven from things like edge AI, enhanced cyber security requirements, and AI will increase the value of semiconductor products by having larger silicon area. We've strengthened our relationship with the major foundries and generally with the ASIC supply chain, and we're offering us a supply-only model where the customer does the design, and that will provide a faster path to supply revenue, but albeit at a slightly lower gross margin. But all in all, really strengthening our position in terms of this transition into a fabless supply company. Just to summarize that, we're trading in line with expectations for financial year 2025. We've had excellent new design wins, as you've seen from the slide, for the new financial year, and we have a strong pipeline of RFQs. These are building a strong reoccurring revenue stream. When you see the level of NRE we had this year, that will lead down to down the line to strong reoccurring revenues as those chips go into production. Supply is beginning to generate improved cash generation, and we're very much seeing it this year as those support for ones ramp up to production. We have the new debt facility with Lloyds Bank, which unlocks additional working capital, and we've had accreditation from renowned global customers such as Siemens, which really shows we're in a great position with top tier customers. Okay, thanks, and we can go on to the questions.
Perfect. Ian, Christoph, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab, which is situated on the top right corner of your screen. But just while the company take a few moments to view the questions that have been submitted today, I'd like to remind you that the recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you can see, we have received a number of questions, both pre-submitted and throughout today's live event. And Christoph, if I could hand over to you to chair the Q&A, that'd be great, and then I'll pick up from you both at the end.
Perfect. Thank you very much. So starting off with the first question, with young companies growing, cash flow is a constant issue, and I understand this was a primary reason for the last fundraise. Has the situation improved now, and mindful about the new contracts you are signing? So we do not anticipate having to raise additional funds this year. We expect to receive the upfronts from our contract signed, and we are also in the process of winning a further 2 to 3 new contracts, which will further strengthen and give us additional headroom. So yes, the answer to that is we don't expect to raise additional funds at this point. Should we win a very big NRE and supply contract, that could change things, but to be honest, that would be a nice problem to have. So moving on to the next one. In the articles of association, you mentioned deferred shares. What is their usage in ENSILICA, and who benefits from them?
Okay, yeah, I mean, they're actually a sort of an artifact from the IPO, going from a private company to with various share classes to one of a listed company with a single ordinary share class. So those deferred shares have no voting rights, no dividend rights, no capital rights. So there is no value to those shares. No one will benefit from them.
So question 3. How often do you still need to do share issuances? I think we covered that in the previous question. Is the usage of warrants needed? I would say that the company will take the usage of warrants under review on an as-needed basis. It does allow existing shareholders with the potential to further invest in the company should they want to. But we will assess that should we decide to raise funds in the future. And then the next question. In the previous presentations, the company has suggested that current capital constraints make you reluctant to bid for some of the 100+ million opportunities now on offer that you're part of the TSMC DCA. This is no surprise because at current share price levels, raising the required capital would come with significant dilution. With interest rates now falling, will equity placings remain the company's preferred way to raise capital moving forward, or will you take on more debt to provide better shareholder value? Again, I think we've answered that in terms of we've recently refinanced our debt for a new 6 million facility, unlocking an additional 2.1 million of working capital. And we also have an accordion option for an additional 3 million, subject to credit approval. And our plans would be to look at using that to give us additional capital in case we need it before we go back to shareholders, should it be available to us. How much effort is spent on marketing the company to the wider public of retail investors?
Okay, I'll do this one. I mean, we actively use RNSs to keep our investor base up to date, and we are doing things like AJ Bell share investor meetings. So we also use this for results. So I mean, hopefully we're doing enough. But always happy to hear suggestions of how we can improve our communications.
So, how does the 30 million over 7 years chip order work? Are 4.28 million of chips made once a year? Is it more expensive to print the chip 7 times rather than once?
Okay. So in terms of when we announce a design win of say 30 million over 7 years, so in this case the 30 million is all supply revenue. There's normally a sort of ramp up of the chip. It takes 2 years to get to full volume, and then it will run at full volume, and then it will run down. I mean, generally we will be making those chips every month, putting in an order, filling the pipeline of the foundry, then the packaging house, and then shipping to the customer. So it's not that you don't put in one big order for the full batch. You spread those over the years based on the customer demand. So you keep flowing them into the customer, and it doesn't use up too much working capital.
Next question. Why was there a delay in publishing the annual report? 2023 annual report was published in October, but this one was published 1 month later, November 2024. So the simple reason was we wanted to complete the refinancing of the loans and be able to disclose that in our accounts to show that we've made this improvement and we unlocked the additional working capital and the potential 3 million accordion. Since the euro 2.5 million satellite broadband contract in August 2023, has there been any indications that other potential clients are interested? How do you see this opportunity panning out?
Yeah, I mean, I went through that slide on this sort of satellite communication sector. I mean, we're seeing interest both in the chips we have and derivatives of those chips based on the technology. So I see huge potential for that as those they're building the satellite constellations now, and volumes for that will obviously track as the satellite constellations get launched. I mean, these are more longer term things where it's 2 to 3 years out before we get to real high volume production, but certainly excellent potential there, and we've got some really good technology.
Where do you see ENSILICA in 3 years' time? So I think probably I'll give my view, and then if you add anything. So in 3 years' time, I'd like to see us in a position where more than half of our revenues come from the supply of chips, and ideally, 60 to 75% would be a nice place to be. And also the company is generating positive operational cash flows both on a monthly and an annual basis. And we are really looking strategically to see where we can invest in order to further our growth.
Yeah, I mean, I would echo that. I mean, that's certainly, we want to be in this, the situation where we have the pipeline to do it, in terms of dominated by supply revenue. That will very much smooth out our cash flow and put us in a position where we can sort of further invest in differentiating technology and increase our margin. So our vision is to be a sort of premier ASIC supplier in Europe, and I think we've got a great path, and we can be there. We can be there in 3 years.
Have you now built an application support team?
I mean, we have application support both in sort of pre-sales side, where we have people supporting pre-sales activities, and then once we've sort of tested the silicon, the people involved in testing the silicon in the lab help support the customer in terms of on the application side.
How much does it cost to take out the ENSILICA healthcare chip?
Okay. So in terms of the tape out and associated costs with this type of technology, it's about £500,000. It's about £500,000, but there's also costs associated, as I mentioned before, with the specialist marketing and sales activity, needed to generate the traction.
Can shareholders expect a quicker tempo for releasing the prelims in 2025? The answer is yes. We would probably look to release at the start of October rather than early November. Sorry. ENSILICA ENS 6220. Could you talk about the potential you see in this chip?
Okay, so that's actually that's the healthcare chip. So I talked about the potential markets there, including smart diagnostic devices and other vital signs type stuff previously when I went through the healthcare slides.
So you say that financial year 25 revenue of 30 million is 65% visible, and refer to 3 NRE supply contracts in negotiation with 11.1 million in NRE by year end. Is that calendar or financial year end? If they are all secured, does that fully close the 35% gap? So I would say that we expect to close those contracts by year end. I don't think we would say that we would generate and complete those revenues by year end. So a portion of that revenue we would expect to generate in 2025, and then more of that in 2026. So whilst the contracts that we've won over the last 3-4 years and are looking to win, or 3-4 months, and are looking to win now, will give us greater visibility. And when we're getting very close to that 30 million, we have to win a bit more work at the current run rate that we are winning it in order to achieve the 30 million. But we are confident of achieving that. Please define tape out, which you mentioned in relation to EBITDA. I think I explained that. So I think we covered that question, unless you wanted to add something, Ian. No.
No, I don't think. I think that means tape out rather than take out. So yeah. Okay. So yeah, I think we covered that. So yeah, tape out is the tooling for the chip before it goes into production.
The $20 million US tape-out contract appears to have contributed 8.8 million to financial year 24 revenues, but has reduced the gross margin. Is the remaining half of this contract still expected in financial year 2025, and would it also be lower gross margin than your other NRE supply consultancy business? I'm not sure exactly which one is the 20 million US takeout, but I think I know. And I think part of the revenue was generated in financial year 2023 and 24. And then there's a portion in 2025, but it's coming towards the end of that contract and going into the supply side of it, I believe.
Yeah, that's correct. Yeah.
So we hope to see the upside from that in terms of the supply coming through. In this section, outlook of the accounts, the phrase additional external finance may be required should the company experience further delays in contracted customer receipts. Does that mean customers have cash flow problems? No, it doesn't. I think I mentioned before, we had some delays in signing contracts, which has impacted our cash flow. We expect to recover the contract receipts from customers, and we are also expecting to sign new contracts, which will further bolster our cash position and give us headroom. Okay, I think we covered that one. Your report refers to the opportunity for an healthcare ASSP, but state that a lack of capital is holding this back. Do you plan to address this capital issue?
I mean, not directly. I mean, we see that we will be cash generative, and then we can use that cash to invest in that product further. I said our focus is very much on generating more products that drive more near-term revenue.
So, what is the potential value of the IP licensing contracts?
I mean, it's not a focus for us. We develop IP. That IP has a value, and we'll license that IP to other semiconductor companies that we consider to be non-competing. I mean, things like the post-quantum cryptography, the license fees for that are very high. Almost one license will pay for the development, and we still have that. We still have that IP to use in our own products and license again. So not a focus for the business, but we do assume a few licensing projects where we will license our valuable IP to other semiconductor companies.
It appears that some NRE supply contracts may have been delayed. Are contracts moving into the supply stage on schedule? Is this timescale defined by contract, or is it at the customer's discretion? So I would say that any delays have been more in the signing of the contracts and concluding negotiations. Usually, as soon as we sign the contract, the customer would have liked us to start the NRE work about two weeks ago. So that usually moves forward quite quickly. We haven't seen any delays in terms of chips moving into supply. These are as per forecast, and our forecast for 25 is currently in line with what our expectations were at the start of the year. Strengthening position, but no reference to profit. So we reiterate our guidance of 30 million of revenues and 5 million of EBITDA, and that should translate into a profit after tax for our investors. Can you give more details behind the comments? RE H2 bias for 2025. What are the key factors? We expect our revenues to be second half weighted. This is in line with the prior year. And the factors that drive that is when we sign the contracts. So you'll have seen a lot of contracts have been signed over the last 3 to 4 months. And the work on that is now starting. When we get to the second half of the year, those are expected to be in full flight. So we see increased revenues in the second half of the year. L&B are forecasting supply revenue of 16 million in financial year 2026. Please, could you give us a feel for what you hope supply revenue to get to over the next 3 to 5 years? Oh, putting ourselves out on a limb on that. I think probably the answer is that we expect revenues to double in financial year 25, and then we expect them to double again in 26, all things being equal. I would hope that in 5 years' time, I think as mentioned before, between 3 and 5 years, we would hope that supply revenues are anything between 50 to 75% of our overall revenues. So becoming much more of a part of a main part of our revenues, which gives us good cash flow generation, good profits, and allows us to really think seriously about where can we invest to further shareholder value. So, how can you get on top of delays in contracted customer receipts? I think, as I mentioned before, the main issue is to sign the contracts as quickly as possible. And I don't think we've got a problem with getting receipts in. It's more in signing those customers up as quickly as possible and managing how we are setting out the payments. It is a negotiation with the customer, but I do think we mostly are able to achieve good results for the company, although sometimes we do have to meet the customer in the middle in terms of how big of an upfront we are able to get at the start of the contract. We'd always like it to be as big as possible, but sometimes we have to take a bit of a smaller one. Can you explain what is the meaning of the scary going concern financial statement? So again, as I said before, our auditors look at things on a downside scenario. So they look at the case in which something goes wrong with a customer and, for example, they do not pay. That is not what the board believe will happen. We believe we will generate the customer receipts and recover those, and we also expect to sign up the new contracts that will give us the additional headroom. So the board firmly believes that we will not need to raise funds and that the company is in a healthy operational position. Can you describe the difference between NRE and consulting exactly? What were IP sales in the financial year and where is it placed among the 3 revenue line items?
I can explain the difference between NRE. So NRE stands for non-recurring engineering fees, and that's the fees that we charge a customer for developing a chip, which later leads into to supply revenue. So that's made up of the cost of the people and things like licensing third-party IP, EDA tools, and the masking of the chip, which is the tape out that we've talked about. Where consultancy is where we work for a semiconductor company and basically charge our time for helping them develop the chip. So the NRE one is the one which is the sort of the key focus, and that leads to as I said, the reoccurring supply revenue. In terms of where the IP side is relatively small.
I think it's in the NRE section, but I would just need to confirm that.
Yeah.
So, as you are not able to go after all the business out there, would you not be better selling yourselves to a much larger company? Shareholders have not benefited since IPO. I mean, we as the directors and the board, we believe in the value of the company. We think that as a standalone company, the company's better placed to deliver shareholder value. We believe we are on the road to delivering that, and we do expect that as we get more chips into supply, as we win more NRE contracts, as those supply revenues increase, we should see the share price go up together with that. We appreciate it is a journey, but we do think that there is an enormous amount of potential benefit in the company. So from our side, we see that as the greatest benefit to shareholders. The second Siemens contract was stated in today's RNS as valued at 2.5 million. Is that figure correct?
No, I don't think so. No, I don't think we've stated the value of that. No.
Yeah. When are you forecasting that the company will be increasing the net cash position each month? So we expect that during the beginning of financial year 2026 is when we will start generating positive operational cash flows. What exactly is the current fully diluted share count? I believe that is in the financial statements, but I could not tell you offhand.
Likewise, yeah.
Yes. Can we expect any director purchases in the near future? Again, I don't think that's an answer I can tell you on this call, but I wouldn't be surprised if that takes place in future. But there hasn't been an LNB broker note this morning. Are they still covering ENSILICA? The answer is yes, they are still covering, and I expect that they will send through a note in the coming days or weeks. I can't exactly say when that will be, but we do expect that to come through.
Yeah, I was briefing them this morning on.
Yes.
Yeah. So it will be out shortly.
Is the beamforming ZIG proprietary to the customer or something you could market? What band does it work in? L band, KA, KU, something else?
Okay. So in terms of the RF chip, which is actually an RF beamformer, is KA band, but we are also looking at other bands like KU. The beamformer chip, which forms what's called a hybrid beamformer, is sort of a digital chip, so it does digital beamforming, and that is sort of agnostic to the band, so that will work with different bands.
I think we're starting to come to the end, so probably maybe last two questions. Sorry, and I think this one might be for you. You've mentioned new contract wins which use the ARM ISA. In the long term, it looks like RISC-V will gain significant traction, not helped by ARM versus Qualcomm. So I wonder if any of your customers are asking for RISC-V cores, and how well positioned the company is to benefit from increased RISC-V adoption.
Yes. I mean, we've done RISC-V designs in the past, so we're very familiar with integrating different types of microprocessors. I mean, we're agnostic, but there's no doubt that in applications such as automotive and industrial, ARM is ARM is very much the market leader there. But I mean, as I said, we're very well prepared. We are an ARM partner, work with them actively, but we are CPU agnostic. So one more.
Is your US consulting firm managing to attract new US investors? So we are seeing some traction on that, and we've had some investors from the US. It is still early stage, but we hope to see some further traction on that and be able to provide positive news. So I think we've come to the end. Thank you very, very much, and I'll just hand over to Ian to give the last concluding comments.
Okay, thanks, Christos. I would like to thank everyone for their interest in the company, and there's a lot of people who have been following us very closely. We've had a very good year, and we've started this financial year well. I mean, you saw that the NRE is up, which means that that's driving the number of chips that we're developing that are going to go into supply production. So this business model, we have the sort of fabulous chip business. It's not a new model. It's well proven to deliver shareholder returns. So I'm very pleased with the way we're moving forward on it. Thanks very much.
Ian, Christoph, thank you very much for updating investors today. Could I please ask investors not to close the session, as you now be automatically redirected to provide your feedback in order the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of ENSILICA PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.